Good morning. We're here in Davos of Switzerland at the Greek House Davos. So, in our first session, we will be discussing on the financing and investments, how to shape an enabling environment to boost investment activities. So, we are very honored to host here two honored guests, Mr. Philipp Monnier, Director of WayRay, and Mr. Achilleoudis, who is the Group Managing Director of AXIA Ventures Group. So, dear Mr. Monnier, I would like to start with you to say a few things about your company, and then Mr. Achilleoudis, and then we'll proceed with our discussion topics.
Okay, thank you very much. Thank you for inviting me. So, I am board member of several companies, but I think you refer to WayRay AG, which is a company which was established in Russia. When I was in charge of the economic development of Western Switzerland, we attracted WayRay from Russia to Switzerland, and now the headquarters is in Zurich in Switzerland since about 7 years. WayRay is a company that focuses on augmented reality for the car industry, and we raised in total about 100 million. One of the first major investors was Jack Ma on Alibaba, that I happened to meet in the Hotel Belvedere in Davos 5 years ago. And then the other investor we have, which came later, is Porsche, Hyundai, JVC Kenwood, and again Alibaba in the next round. So we have about now 250 employees. We have an affiliate in Russia that we have to close, and we will relocate to another country in Europe, probably Barcelona, Spain, for these Russian colleagues. And part of them will also be relocated to Switzerland. So this was the question.
Thank you very much. Mr. Achilleoudis.
Good morning from me as well. AXIA Ventures Group is an investment bank that focuses on peripheral European countries. We have offices in Milan, in Athens, in Nicosia, in New York, and primarily we focus on servicing foreign investors that are looking to deploy capital or acquire companies in the regions that we are focused on and that we have offices. So we have execution teams on the ground that assist large institutional investors or strategic investors that are looking to raise capital or invest in our region. That's the short version of who we are.
Okay, thank you very much. And I'm Ioanna Samprakou. I'm the Deputy Chairman of REDS, a member of Elector Group. I'm also a founder and managing partner of Chiltern Media, a film financing group, and also CEO of Philipp Global Consulting Services. So we would like to start with our first discussion topic. So COVID situation triggered governments, institutions, and IFIs to rapidly design and implement mechanisms and financial instruments to assist local and regional economies in reaching a quick recovery from the crisis. So I would like to start our discussion with exchanging ideas on what could be a winning recipe for creating a really enabling investment environment after COVID. What would be an optimal mix, let's say, from government incentives, banking and financial institution support, as well as private sector contribution, and which should better come first and which should follow? Who would like to start? Mr. Monnier?
Okay, so I think that the COVID didn't change much. I don't think it's so relevant before and after COVID. Normally, most countries or most regions and even big cities, they have economic development agencies, and those agencies are in charge of attracting foreign investment. On myself, I was in charge during 5 years of an agency called Greater Geneva Bern Area, in charge of attracting investors to Western Switzerland. So my learning from those 5 years is that you can do it in two different ways. In the first way, you have a group of people who understand extremely well business, who are extremely hardworking, who have no fear, They go to events like Davos, they meet everybody. They don't care if you're the biggest CEO or not. They just go and sell the country without any fear. They also know extremely well the business of their country and the business of the company they target. And they manage to attract great company to their countries. There is absolute great value addition. It's not so difficult, not so easy to find those people because they are state employees, so they get very low salaries. But they may have, they may love what they do and they can do it with all their energy and heart. This is a good way. You also have the bad way to do it. So if you have a bunch of lazy people who are work for the state because they want to minimize their engagement in the job. And in their countries, anyway, there are companies coming. I mean, you have investors who go to Germany because it's a big country, you have to be Germany. They go to Switzerland because it's a nice country, because there are many advantages. They go to Greece because Greece is an important country, you need to have an affiliate in Greece. So anyway, they go to invest. And you have those bunch of lazy people from the State Development Agency, they just give them incentive. But you don't need incentive. Anyway, they will invest in Greece anyway. So why do you give them a tax rebate, help left and right? They will invest anyway. Why do they do it? Because they want to make sure that the day they open an office or factory, their minister is also invited to cut the ribbon, and the minister will be re-elected in an easier manner. So in the first case, the economic value addition is enormous for the country. In the second case, the economic value addition is negative because those incentives are not needed to attract companies. The political economic addition for the minister can be extremely good. In my opinion, it's more important to care about the country, about the people, than about helping the minister to be re-elected. So this is, in my view, the good way and the bad way. And I hope Greece will take the good way.
And I'll continue from where you left it,
yeah,
and focus on the Greek situation, which is actually quite fascinating because in general I would agree with you 100% that in most countries the post and pre-COVID, yes, there's some government funds and but they primarily are there to fill in a hole. With Greece it's a little different because Greece has managed to actually have recovery funding that is very substantial compared to its percentage of GDP and other countries. And this is so impactful because it almost enables the country, if it's run responsibly, to uproot, I guess picture a tree that hasn't bear fruit in years, maybe ever. So it's almost like a burned tree and you need to take the root out and replant it, and the only way that you can do it is with foreign direct investment and capital that flows into the country, but a push from the government will basically help make a lot of investments viable. And this is a country that is undersupplied in many ways. I mean, from real estate there was no excess, hotels, primary industries, secondary industries, you have a great location that can be capitalized on many ways, but you need that push from the government. At this point, the shackles have come off and all the restrictions that existed for many years in Greece, and all of a sudden they have this excess capital that they can enable all these investments. So what we need is a responsible government to deploy this capital. I believe we have one, which is astonishing. I mean, because in Greece we've suffered a lot with the waste, and at this point we have a responsible government that we feel will actually help that multiplier effect and the impact that this money can provide to fundamentally change the dynamics of the economy, and not simply enable a few wealthy businessmen and their political friends to become wealthier. So I think post-COVID, Greece has incredible potential. So I think Mr. Patelis yesterday, the chief economic advisor to the Prime Minister, said it very well. I mean, we are benefiting from the economic after effects of COVID on many ways. And also, the only other dynamic that exists is with tourism, because we anticipate that tourism will boom in this year and potentially in the coming years, and establishing Greece as an upgraded tourist destination. But the after effect of the travel boom that is taking place right now, Greece is fully capitalizing on it as well. So I think this is going to have a material impact at a time when a lot of other economies might be suffering from weak economic growth or recessions because of inflation and high prices for energy and so on and so forth. I think Greece is quite resilient, and the tourism boom will further help on that front. So that's
okay. Thank you both. Starting from the fact that the tourism sector will be booming the next year. So overall, the studies present Greece as a post-COVID, truly very attractive investment destination. And meantime, we're in the beginning of the next programmatic period, 2021-2027. We already have secured a tremendous high amount from the Recovery and Resilience Fund, RRF, and of regional European funds, both agricultural policy, amounting all them together cumulatively more than 80 billion. So there's a lot of money on the table, as we could say, which the government wishes to use it to trigger even more the private sector contribution and investments. Just to mention for also our audience that based on the Commission report of 2022, recently posted, the expected growth for Greece in 2002 is expected to reach 3.5 and 3.1 in 2023. So having said that, which sectors apart from tourism do you think could become a game changer for Greece?
So I will not comment on this because I don't know well enough Greece to have an opinion about it. Maybe I would comment what you said. I used to work in a large company, and then a global company as a head of strategy, and then we decided to have a factory, a big factory of about 1,000 people in Latin America. So we made very deep analysis about suppliers, about quality of manpower, and then we decided to have it in Brazil. And then we decided we will do it in Brazil, 100% sure. It was decided. Then we said, let's contact the Economic Development Agency. Maybe we get incentives. So we contacted them. I didn't do it myself, but I suppose that we said, yeah, we're hesitating between Brazil and maybe Mexico and maybe USA. We are not sure, we are comparing. And so finally, even though it was decided that we do it in Brazil, the government gave us 10 years, 100% tax rebate. They build a road for us, they this and that. So this is why I think that public money, yes, it could be a smart money and it could trigger a lot of investment, but there is always a risk to be in the case I mentioned, and that actually public money is poorly wasted.
So, Mr. Achilleoudis, what's your opinion on the sectors, and what does really matter when we discuss about attracting foreign investors? Because you are the best person, I think.
Tourism is being upgraded, and that's great. I think Greece is virgin territory, but it has to capitalize on its location. And the flow of goods and services from China, for example. So the ports have multiplied their capacity. Yet we're really not offering anything besides shipping trade, and there's an opportunity which again needs additional infrastructure capital and help from RRF and private investments in order to become a logistical assembly hub. And these will have long-lasting impact on the whole region, because you need transportation and digital modernization in order to enable these things to happen. But it can become the logistics transportation leader in that segment. So you already have one part of the equation, which is practically impossible for anybody else to get overnight, which is the flow of goods and services that come up the canal and land in Piraeus port. The key is to completely capitalize on that. And in order for many of those investments to become viable, they need that additional push and help from RRF. And the government also needs to cooperate to provide incentives in order for very large corporations to have their base in Greece, their regional base. They've done that successfully with Pfizer, Microsoft, Amazon, and there are obviously a lot of others in the works. And if I had the ability to see the calendar of our Prime Minister at Davos alone, I'm 100% sure it will be very crowded with attempts to attract these type of companies and bring them to create a modern digital transportation logistical hub in the region. There's many other sectors. You're in real estate, and real estate has never been institutionalized in Greece, but now for the first time. And what does that mean? It means that there's large capital pools that are dedicated to real estate, and it's not simply a mom and pop sector, and many times that can lead to overinvestment and oversupply. But before the credit crisis, Greece provided enough product for local consumption. Then 10 years of crisis, there was nothing. Other economies were overwhelmed with supply in 08, 09. They absorbed all that supply and overbuilt again over the last 10, 15 years. From our perspective, this is the first time that we're actually upgrading the real estate stock that we have. A lot of it is distressed and is on bank balance sheets transferred to servicers and investors. But also there's ambitious developments that are taking place that will materially change that landscape. So this is another sector that, in my view, will be hugely upgraded. And by doing that, you also provide a product for foreigners to buy, both commercial real estate, for companies that are moving in, logistics centers, but also residential, because again, Greece is a primary destination for tourists, and if there's no product, then nobody will move permanently there. If you provide the product, then tens of thousands of people could move and retire or use it as a vacation destination, which has all year round effect and much longer lasting than somebody who just drops in for a week and spends a little bit of money as a tourist. So these are kind of a couple of highlights.
Okay, thank you very much. So you gave me a good opportunity to go to the third discussion item. So it is true that Greece had not much exploited so far the type of the PPP, the type of project financing, public-private partnerships, for utilizing private sector funds in the previous decades. So we have observed, however, that in many European and not only European, globally, in other countries, the PPP instruments have led to the creation of large infrastructures, both in energy, in R&D, in health and logistics, in ports, airports, and not only. So which has created an intense investment activity in those local economies. So I would like us to discuss whether mechanisms such as public-private partnership schemes could help in a faster and more efficient execution of the private investments. And last, what could be the key attributes to design innovative and attractive financial instruments which could post-COVID boost investment activity even more? So I would like your thoughts about that. Mr. Monnier, you have an international experience on that.
I think that PPP, public-private partnership, can be good, provided it is led by a real demand, by a real market, and led by, I would say, the private sector. In Switzerland, we have I would say, a strong thinking that government doesn't understand anything about business, and that government should not be involved in business, and that the less they involve, the better. And this is not only the thinking of the private sector like myself, this is also the thinking of the government. They know they don't understand business, they know nothing about business, and they are not active in business. However, to foster innovation, we have a program which is very specific to Switzerland. In many other countries like France, the government decide, okay, let's focus on, let's say, artificial intelligence, and they would invest massive amount of money or help companies with state money in this artificial intelligence field. In Switzerland, the government says, we don't know what is important. We don't know whether artificial intelligence is important or not because we know nothing about business. But we have a scheme that if a private company make an investment, the government can make a matching investment in terms of paying the salary of professor of university. So there is a joint project between the private sector, led by the private sector, because there is a market demand, and the government match to pay the salary of professor, on the idea that there is a joint innovation project, and that it also helps university to be not far away from reality, to be in touch with companies. But again, the key driver is the private sector, not the government.
Well, Philipp, I don't think I have much to add there, because you might trust these government in Greece, but in general, there's huge mistrust for governments, and you don't know what's coming next. Maybe not the next 5 years, but maybe in 10 years or 15 years from now. So the political landscape in Greece has been volatile since inception of the modern state. So the difficulty of partnering up with government and the obstacles that exist are enormous. So I think the government enabling investments to happen or taking the back seat on certain investments could motivate private capital to come through, but proper governance and control from the private sector is absolutely necessary.
Okay, so Mr. Achilleoudis, could you now please share with us the state of play in the investment environment in Greece?
Well, there's definitely a lot of liquidity globally, even in today's environment of rising interest rates. I guess Greece offers two things to investors and that are visible, and I think there's a lot of demand for investing in Greece because of these two reasons. One, there's opportunities that are at for higher return than the rest of the world. If you, let's say, again, use a very simple example, if you buy real estate, if you buy a building, you're probably going to have much better performance than other countries. If you buy a company in Greece, you can potentially buy cheaper and have better returns than in other parts of the world that had been flooded with liquidity for a much longer period of time, and valuations have adapted to that reality. But at the same time, you have an economic environment which is very vibrant and not as much impacted by the global events as in the past. In the past, it was very sensitive to global events. Now, maybe because the government has at its disposal tools to help, it will basically shelter it a little bit more from an economic slowdown than other countries. So the country has been scraping the bottom for 10 years and hasn't enjoyed that flood of liquidity and economic boom that existed in other markets. For that reason, when economies recover from a 25+% contraction, they don't simply go up 2 and 3% for a couple of years. They see a material rebound, and it can be longer lasting because simply there's a lot of growth by making things that are intuitive and not as complex. So the upside for the economic environment is very material compared to other countries and other jurisdictions, and at the same time you have pricing which is very attractive. The biggest obstacle for foreign capital is the fact that there's not a whole lot of things that are very investable, especially scaled. And most of our clients are, looking for large investments and not, $5 and $10 million investments. So the obstacle in finding investable opportunities is the biggest issue. So there's a bottleneck that's created between the amount of money that needs to be invested and the actual money that's dripping into the economy from foreign capital. The solutions are, as Mr. Ioannis, the Minister of Development, mentioned yesterday, for the government to enable this capital to come through with fewer obstacles. So far it's been happening, but this has to happen without government intervention.
Yes.
It has to be part of a system that works.
But are you optimistic that, let's say, within 2020, I wouldn't say 22, even 23 or 24, we would have some big deals, let's say? Okay,
I'm very optimistic. We see it every day. From what we see from our desk, I mean, there was no interruption in any of the transactions that are happening, especially private deals. I mean, if it's equity placements or fixed income security related transactions, there's a bit of a pause because of the war, because of the uncertainty in global markets. Private investments haven't slowed down. If anything, they're accelerating and continuing.
Perfect.
So I'm very confident on that.
Perfect. So, Mr. Monnier, I would like now to share with us your company's growth strategy post-COVID. You are a high-tech company which has successfully managed to attract multi-million investments pre-COVID. How did the global COVID crisis affected, if it affected, your business plans? And what instruments might be useful for your company to scale? And is still technology sector on the top of the global investment focus?
So the WayRay is a pre-commercial company. In the automotive industry, actually the amount of investment you need to reach the market is enormous. But at the same time, the markets are extremely high because we have 100 million new cars per year. So WayRay started about 10 years ago. I think we are 2 years away from the market. COVID, yes, it was a challenge in terms of meeting clients, meeting suppliers, shipping goods, especially meeting clients in the USA and in Asia. So yes, it slowed down the process. Whether it is still, I would not say the technology sector is on the top of the agenda of investors because it really depends on the technology and on the precise opportunities. So in our case, yes, absolutely. I mean, we have a lot of investors backing us up. And then the strategy for growth. So we will have a new investment round this year. And then we will probably IPO in 1 year. And we serve the very large automotive market, which is targeting now about 5 car companies, which are very big.
Okay. Thank you very much. So, dear Mr. Achilleoudis, back to you again. Before we close the session, could you please share with us how do you think Greece could meet the high expectations which currently exist in terms of this investment wave, which seems to be now approaching Greece, as you also shared with us earlier. So how could we truly benefit from this instead of once again surfing above this wave, let's say, so and lose that momentum? So what it will take to make this opportunity an actual cash inflow into the local economy?
Well, in order to have that long-lasting effect, you have to have investments that are impacting the roots of the problem. And I think at this point, Greece is attempting to do that. And it's at an early stage of this transition. So we're seeing some very significant projects. For example, the Hellenico project in Athens that this government enabled to permit and license, and it's now finally becoming a reality, will have a massive impact on tourism all year round because it's in the center of Athens. It's creating a destination that will bring tens of thousands of tourists all year round. And finally make Athens an end destination, not just a place where we stay for one night to go to the islands. And so this is a simple example. The other examples I gave earlier about creating a logistics hub and transportation hub and taking advantage of the privileged position that we have at Piraeus Port will have long-lasting impact. And I think these can be replicated in many sectors. What we've seen over the last few years is a transformation of these small, over-levered businesses that were funded by banks that have been taken over by private equity. They're consolidating. So the hospital sector, the insurance sector, the fish farming sector, these are major industries in the country. So a lot of the work has already been done in order to transform them into large corporations with proper governance that are properly capitalized and have an efficient structure and management. These will create market leaders that are extroverted, are looking in international markets, and are providing a globally competitive service or product. And this has long-lasting effect and impact versus a troubled company which is struggling to make ends meet. So a lot of things are happening, many things are at an earlier stage, but we're very confident that this government and the economic flow of capital will help accelerate the pace.
Thank you very much. So, dear Mr. Monnier, before we pass the floor into our audience for some questions, I would like to ask you the final question. Having a multinational long experience in winning strategies to attract foreign investment, we would like to kindly ask you to give us a statement of yours of what is, per your opinion, an investment-enabling environment in what we call in our session post-COVID era. What could be a really enabling investment environment for any country in a post-COVID period?
I think that, in my view, the most important thing is that the investor feel the energy. Maybe a country can be completely destroyed, can be vibrant, but if an investor feels the energy in the country, it is very positive. On myself, I've been very impressed by Singapore. I traveled to Singapore the first time, I think maybe in 87, 88. Everybody was so enthusiastic, working so hard, believing so much in their country, that regardless of the state of the country, if you feel this energy, this is really the winning element.
So would you like, would anyone of you like to say something before we take some questions? Okay.
We'll have to give in 10 minutes, 8 minutes.
I would like to add that the
Mrs. Irini Vantaraki.
I am Irene Vantaraki. I would, first of all, thank you all for your participation. And I would like to add that at this moment Greece is a very vibrant environment for investment. Maybe the strict economic, it's not on the right place exactly right now, but the enthusiasm and the climate and all the environment, which is, I believe, the most important, as you already said, is on the place, on the right mode now. So Greece is exploring all the opportunities that might come from Davos, from World Economic Forum, and from all over the world. Now, more sustainable and with a strategy.
Yeah. Maybe one important thing, when I was in economic development of Switzerland, we did everything to be in the international press, to be covered by the press. And we targeted countries like China, because China, they love Switzerland as a place for tourism, for the cows, the chocolate, the cheese. But for Chinese business people, Switzerland was not a place for investment, and we wanted to change a little bit this image, and for us to be in Chinese press, like press for the country, the main press, was very important. And since then, I have about 5 interviews from the main Chinese media every time in Davos, and the next one is actually in 6 minutes. So maybe if you will excuse me in 3 minutes, I will have to go.
You're very active, right?
Correct.
So this is the outcome of having a presence here in Davos, and we all thank Mr. Van der Eyck and this initiative that for the first time Greece can be here in the very heart.
To explore Greece as your
Next investment focus.
We are here for you.
Thank you.
So Mr. Achilleoudis, something to close up?
Yeah, I mean, I think that the net conclusion of our discussion is that Greece is very different today than it was in the past. It's transforming and it's very dynamic. So the advantage of having a country that offers very good valuations alongside healthy economic growth, stable political environment, and improving tax regime. It has all the ingredients for foreign investors to consider it as a primary global destination. And it's also creating an ecosystem for startups, which is very good, but that's a whole different discussion.
Yes, innovation. There was a very good discussion, I think, the first day with our Deputy Minister here, Mr. Christos Dimas. So thank you both for this lively discussion. Live from Davos of Switzerland.
Thank you.
Thank you.
I have to run. Excuse me. I'll give you my card.
You gave me your card earlier.
Yes. You're right. You're right. Yes, I will have
Came from the
run.
hotel and I left my card.
Thank you so much.
One moment.